Welcome to the Market Huddle Plus. I'm Patrick Serezin, and this week we welcome back to the show Boris Schlossberg from BK Traders. Going to chat with him about NVIDIA, Bitcoin, gold, and more. Boris, great to have you back on the show, bud.
Nice to be with you. We're like dark mode, light mode today.
Exactly. There you go. Listen, let's just start off with a big picture. Like you have so many things on your mind.
Yeah.
Why don't you start off, give us a high level of like what the hell's going on here in these markets?
Well, first of all, truly just the Terminator market, right? I mean, it's incredible. I tweeted out tongue in cheek today. Monday, rebels take Aleppo. Tuesday, South Korea declares martial law. Wednesday, a high level executive gets assassinated basically in broad daylight in Midtown Manhattan. Markets couldn't care less. We just keep going up and up and up. I took a nap. I woke up. The S&P is nearly 6,100. It's just really impressive at the fact that how there is
Yeah.
just incredible bid underneath everything in equities, especially into the year end. What's even more incredible, I think, is the fact that this has been a conventional wisdom. I had a trader fest a couple of weeks ago. Lots of really key traders. All of them were universally bullish into the end of the year. And usually, when that happens, that almost never
The
the
sentiment usually.
yeah, the plot never goes this way. But I think part of it is perhaps people like me who just constantly refuse to believe that there is still a bid in the market. And frankly, you got to admit that it's been a Goldilocks scenario for the equity market in a sense because uh, corporates have had tremendous amount of pricing power. They've been able to pass on that pricing power to the consumer, and at the same time, then pull the rug underneath the producers because production costs have all come down. The PPI has really come down for a lot of production costs. While at the same time, they're able to keep all those. Nobody's rolling back their prices, so the margins have really improved from around 10%, 12% for the S&P, and that's obviously having a positive impact on equities. But all parties have to come to an end. I do think sooner rather than later, we're probably going to see a little bit of turbulence going forward. And then, of course, sorry,
Yeah.
and just like there's so many things that are going on, and if you add the Trump factor in, which is a very positive factor for capital markets, very positive factor, I think, in general, because I feel like the first 6 months, Trump is really going to get tremendous amount of honeymoon. That's why it's unlikely that we see some sort of a corrective event near term. But I think by as 25 comes to a close, we're definitely going to be in danger of some correction.
What's interesting to me is that when I look at these markets and uh, obviously for the last month going backwards, the kind of Republican victory trades were the ones that were driving it. The financials ripping, the consumer discretionaries ripping, energy stocks ripping. These were the breadth of the market widened. These things ran. But what's interesting is overall, the Nasdaq and particularly the Mag Sevens were kind of laggards in that period.
Yes.
They weren't the drivers, but that hasn't been the case this week. This week, we've seen almost a flip.
Yeah.
Financials are correcting. We're seeing some selling in energies, all these things. And suddenly, half the Mag 7s are making 52-week highs,
Yeah.
and they're now the ones driving it. And so, what do you have any opinions on this like dynamic? Is it that going to be still the Trump trades that run this, or is it going to now be almost like the breadth narrows, but the Mag 7's just able to keep the index going?
Yeah, impossible to say, but it does look like the last gasp of the giants. Amazon made all-time highs today, so yes, I mean it still looks pretty good. Having said this, I think the whole tech juggernaut is just running out of capacity. I mean, how much more ads can Google sell? How much more AI does NVIDIA have in it? I mean, I love
Yeah.
AI. I use it all day long. ChatGPT is my best friend. Actually, Claude is my new best friend now, as far as AI goes. But the more I read about it, and I'm a layman, so God knows you can't take my opinion for all it's worth. They're all starting to run into serious capacity constraint in terms of additional intelligence. And the path towards AGI, which is the holy grail that everybody's seeking, is a lot harder than people think. So, Nvidia, I had a small short on just a tactical short on Nvidia at around 150. It worked great because the broken clock is right twice a day. But I do feel like Nvidia really, if you're old enough, reminds me of Cisco. Different story, different sector. I understand all those things, but the same sort of thematic idea that you have this salvation company that's going to radically change the world, and maybe it does, but the valuation gets so out of hand. And as you remember with Cisco, it never ever came back, even though it remained a viable company for a long
Yeah.
time.
The argument I heard against NVIDIA for over like 6 months was that, there's usually these CapEx spending cycles and AI expansion, and they usually would last 4 to 6 quarters. And inevitably, this CapEx cycle will come to an end. They're going to see, their sales start to kind of level off, and the valuation's going to get pulled out of
Right.
out of the stock. And here we are, quarter after quarter, and earnings after earnings, and Nvidia ain't getting dented. Like this thing is holding up like a champ. It'll
Yeah.
be interesting to see what will ultimately break it. I mean, and when something has this kind of a valuation, it will
Yeah.
ultimately have a mean reversion.
I,
Uh,
I have some suspicion what might break it, and it's not what everybody thinks. Everybody thinks maybe it's capacity constraints and just them running out of market or something like that. I actually think capitalism will break it. There are a couple of startups that are now creating all sorts of. And again, I'm not an engineer, so God knows, my words on this should be taken with a barrel of salt. But apparently, there are startups now that are starting to produce chips with specifically designed for AI tasks with far lower cost production, far lower power consumption, far lower all those things. And of course, all of that competition can erode it. Not to mention the fact that just the general
yeah.
cost of intelligence, which is the new metric, has gone down from like $15 an hour to 15 cents an hour, maybe like down to a penny an hour, which we certainly see. I mean, I see tremendous improvement in the chatbots, and that naturally compresses margins as everybody as it becomes more commoditized on the products. So I think there are lots of threats on the horizon for them, but for now, they're a juggernaut. But I do think that 150 level is certainly, from a technical point of
Yeah.
view, a really barrier to overcome, and probably going to be, if it gets challenged again, probably get repelled again. So it's not a bad place to own some put spreads on.
There you go. Yeah. So we have economic news coming out, a few more major ones coming out this year
Right.
before we get into the holiday season. So we've got this Friday jobs numbers. We have next week inflation numbers, and then we end with the FOMC,
Right.
the week of the option
Right.
expiration. And first of all, do you think one of them is more important than the others, and which one is it? And two, do you think any of these could actually be a market event, or has this market just got too much mojo and too much momentum that even a bad print or one comment out of Powell will not be enough to kind of turn the tide? What's your thinking here?
I think um, the latter, that no single print, no comment is going to really hurt the market unless we have something radically different. I think when you're looking at the data right now, two things become pretty clear if you are being objective. First, that economic growth is starting to slow, not collapse, not fall off a cliff, but clearly starting to slow. Today's ISM services, which is probably the single most important indicator we have, had a 3 point drop. We're still
Yeah.
above 50, but it's a 3 point drop from before. That's a significant drop, worse than the market was predicting. At the same time, the other objective truth that we all have to admit is that inflation has not been broken. It's stopped, it's stalled, but it still remains stubbornly high. The prices paid component was higher. So the Fed is in this very uncomfortable box where growth is no longer going and inflation is no longer receding. And I think they have to hold. They can't really cut that much more further. And then you throw in Trump, of course, because God knows he's going to come in and just pound Powell into the sand if he doesn't cut,
Yeah.
because Trump loves lower rates. And I think it does create a cauldron for instability as we go forward, because the facts on the ground are really starting to challenge this whole notion that everything is hunky dory. It's not bad, but it's definitely not great that it was. And it's certainly not getting better on the prices as we would like it to be.
So the first reactions, let's stay on this Trump thing for a moment, because the first reactions were a strong dollar. Strong dollar creates even further disparity in terms of trade balances, which only actually fuels more need for this kind
Yeah,
of tariff talk. But
yeah,
yet, the stronger you make the U.S. economy, the stronger the U.S. dollar will be. It's kind of like a feedback mechanism that is like a no-win. On top of that, if he turns around and tries to, in that environment, cut interest rates,
right.
maybe that fuels the inflation dragon a little bit sooner than Powell would like it.
Yeah.
And this is why Powell may want to be a little more cautious in terms of the path that they take. Like how do you size up this kind of conundrum of like, first of all, let's talk the dollar. Like, what a rip! I mean, we went from 100 on the Dixie to 108. Like, I'm exaggerating the points, but it was like a huge move from the bottom of the range to the top of the range in 2 months. And is the dollar heading higher? Is the euro gonna now go back to 2022 levels and 95 cents? Like, what's your sizing up of the currency markets and the Trump effect?
So let's talk about that because there's so many cross currents going on here that I think it almost makes your head hurt. Number one, why did anybody think that Trump means strong dollar? Last time Trump was in office, dollar was down 10%. Trump is a mercantilist. The last thing Trump likes is a strong dollar. He wants to export his way to heaven, and there is zero, I think, desire in his. I mean, it's strong dollar in a sense of perhaps confidence and braggadocio, but in real economic terms, Trump likes the weak dollar because he wants to pump, 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 baby, both monetary and actually on energy side. So when we're talking about the idea of higher prices, really the single biggest driver of higher prices always is oil. And I think um, his counterpoint to getting the Fed to lower interest rates is I promise you I'll get energy down to 60, 65 a barrel by letting everybody pump as much as possible and therefore keep prices at bay. I think that's the plan that they have in terms of structure. Um, on the other hand, no matter what he does, Europe is a basket case. I
Yeah,
mean, I'm at a point where it's not unreasonable to think that the European Union could begin to fracture. Oh, or at least the European Monetary Union could begin to fracture in some ways. Because the two big actors within Europe, and really the biggest actor is Germany. And Germany is going through just an incredible collapse. I think it's mind-boggling to people. The whole German auto industry, which is literally the core of German
yeah.
industry, is collapsing in front of our eyes, just collapsing in front of our eyes. So that means everybody else who is in line, who's a sub producer for them, is also collapsing. The whole middle, what is it called, Mittelstand, whatever I forget, the middle companies are going to have a very hard time. Secondly, they have a massive social problem with the immigration that they've allowed in. I mean, it's a very serious issue within Germany.
Yeah.
It, as you've seen, most of the Western governments have turned rightward as the populations have really rebelled against this very liberal state-controlled type of quasi-socialist economies everywhere. And until they get that kind of reform, it's going to be very much an open question. I mean, France is in turmoil too. France is basically, what does
Yeah.
Europe manufacture these days besides vacations? That's the great joke on the internet, which unfortunately is very painful because it's not far from the truth. Is Europe's greatest innovation when I was in France is the cap doesn't come off the thing because they can recycle, they get to recycle their cans. And we in the meantime are sending recyclable rockets up and down every 20 minutes. So I think those are the counterpoint to the dollar getting weaker is that the euro could go 95 cents. Yes, I mean we are if the situation in Europe doesn't improve, just the relative growth conditions could get
But
very
it's
tough.
not just the euro. Look at Canada. Like, I mean, you and this is the issue, right? Like it's when we're looking in the FX world, it's about the relative value of a currency versus other currencies. That's the cross currency. And
Right.
the thing is in order for the US dollar to weaken, you
Yeah.
have to have all of these other currencies be in a position to strengthen.
Uh,
And like for instance, when you look at Canada, like the Canadian economy can't deal with a strong currency. Like the weakening currency is just a natural byproduct of the macro circumstances there, and
Well,
like go on.
yeah, certainly. I mean, I was going to say everybody has seen the chart, which is just heartbreaking if you look at it. That from the point of COVID to now, the U.S. and Canadian GDP were essentially in sync, and then you just have like this, the jaws of death, this massive, massive disparity as U.S. economy starts to just continue to grow, and the Canadian economy flatlines, and every year that gap gets bigger and bigger and bigger, and that's the reason why we're at 70 cents to a dollar. It's the reason why my son in Vancouver is looking to get out and come back to New York because
Yeah.
5 years ago it was boomtown and everybody was ready to do business. Now it starts to look like East Hastings all over the whole country. That's a Canadian joke,
Yeah.
everybody gets it. The point is that yes, the most fascinating thing, a chart that I texted you a little while back is Ben Carlson from Wealthaholics posted this, that the U.S. equity market is eating the world. We are 25% of the global GDP, but 65% of global capitalization.
Yeah.
And you can say, well, that's a huge bubble. We're totally overbought, blah, blah, so on and so forth. But actually, if you think about this, it's because most of US companies control huge swaths of economic activity across the world that matters. I mean, the Mag 7 are all multinational corporations. Most of the packaged food companies are US nationals. Even the big financials are starting to become US nationals. So it's not, it looks horrible from just a skew perspective. When you think underneath it, the profits, even though the profits are earned all over the world, but they're brought back into America, and that's why the U.S. capitalization is so much wider, so much bigger.
That's such a big factor. Like it's just a mind blowing stat. But
Yeah,
really, you have to almost though recognize as well that the U.S. is the one that actually almost the U.S. equity market is a part of the lifeblood of Americans. Like if I'm now out here in Portugal, but like in Europe, the average citizen does not look for any equity exposure. They don't go into the stock market. They don't care about the stock market. The idea of owning it, but yet the average American loves the stock market, and it's such a cultural difference, right?
and I'll
Like
go
it's
one further. I'll go on further. The ones that do in Europe, in Singapore, in Asia, even in Vietnam, they're they're trading Nasdaq. They're buying the U.S. market. Because customers, I have customers all across the world, and those guys are just as invested in Nasdaq as we are. That's the irony of the whole thing. That's
it's chasing, but everyone chases performance. So that's the natural thing. And like when you're watching these Mag Sevens ripping, like
right.
even if you're the Swiss National Bank, like you go and buy Apple because it's the asset that's working. Anyway, uh, the one thing currency. While we're on the currencies, I want to just talk to you about the yen. My co-host here, Kevin, and his little groupies are all super yen bullish after this kind of like 10 to 15 year bear market where basically the yen got halved
Right.
on a relative basis. Are you in that same camp? Are you in the camp that this is the kind of turn point where things turn around for Japan, or do you think that that's just going to be more of the same?
I, you know, Japan got down to such inexpensive levels in every single factor. I mean, some of the most. This is a tiny little thing, has nothing to do with finance, but I find it fascinating and amusing. I watch a ton of YouTube videos, right? And one of my pet, things that I love to do is I love to watch food videos. And you'll be watching food videos in Japan, and they have these elaborate meals for $10, like what is it, 1,000 yen or what, 10,000 yen, something like that. And you're like, oh my god! I mean, Tokyo,
Yeah.
I couldn't buy a cup of coffee in New York for $10, and it just shows you the level of deflation that happened in the society. Where in the 1980s, it was worth $100 basically because it was just so everything in Japan was we all remember the
Yeah.
time when the land underneath the Japanese palace was worth more than all the land in California, and that was clearly the time when it was fully overvalued. Now
Yeah.
it's undervalued. And Warren Buffett, of course, one of the great value investors, made a huge investment into Japanese equity markets based upon that. So yeah, I mean, Japanese also have had a very, very long cultural history of using machines to be able to do lots of labor. They are, in many ways, to me, the avant-garde society. They're the oldest society, the ones that uses machines the most, the ones that has the least reproductive rate. These are all trends that are happening in the West, and they are at the forefront of it. And so, therefore, yeah, I mean, I think the Japanese market has more to go. And yes, Japanese rates probably going to start to go up a little bit, and that you don't need much to move the yen stronger, because dollar yen being, having pumped up so much, especially in the last couple of days, because of, as you said, dollar
Yeah.
strength. Yeah, and also, of course, yen always gets stronger anytime we have any turbulence of risk. So all of those reasons can certainly help it strengthen over the next year for sure.
All right, let's go a little bit south of the border. Now, there was this huge bull trade in Mexico. The Mexican peso was doing incredibly well. You had Brazil doing great. Suddenly, Argentina has a change in the government. Like
Yeah,
everything's in the Americas southwards.
yeah.
There's a lot of changes there. What are your opinions on how everything is shaping up here?
My top 10 trade for 2025 is long Argentina, short Brazil. And I'm sure I'm letting my politics get in the way, but it doesn't matter. I am absolute. I mean, I hate Lula, and I love Milei, and I do think that Milei was sort of the forefront of people realizing that socialism doesn't work, and he's made incredibly painful but necessary reforms that are now starting to pay dividends. Argentina is a country of enormous riches and
Yeah.
very, very talented people. And I think if he taps that entrepreneurial streak, it will just become great. And in the meantime, Lula is turning Brazil into communism. You see the real now going to its weakest level. And policy does matter. Yes, you
Yeah.
want to become communist, you're going to become poor. So I think yes, long Argentina, short Brazil, in whichever way you want to express it, but maybe just through the equity markets, probably going to be a very interesting trade going forward.
Now, back to Mexico, though, the obviously one of the things that was working was this idea of friendshoring, which is like bring all these
Yeah,
jobs, take
right.
advantage of the cheap labor down and thing. But suddenly, the Trump variable suddenly seems to have made the taste of that tray sour. Like, how do you think it plays out? Like, are we going to go back to like a 25 cent? Or 25 exchange on the peso to the Mexican dollar? Like, uh, does the
It,
stock market like? Where do you have any opinions there?
it's hard again because Trump is such a unpredictable variable. It's going to be hard to say how tough he's going to be. His criticisms are pretty legitimate. I mean, what's happened is that the Chinese manufacturers just simply moved over to Guadalajara and basically pretended like it's Mexican manufacturing. They basically created lots of outposts over there. And he's right to say that, hey, we want manufacturing local to U.S. jobs, U.S. capital formation. And so there may be, I think there may be some tension over there. Fentanyl, of course, has been a big thing of his, and that seems to be working.
Yeah.
I think she really, she really wants to work with him. She understands that if she doesn't, her government will fall within a year. And Mexico has been a kind of a rebirth story, right? That despite all of the gangs and all of the neo crime that's been going on there, lots of parts of Mexico have really started to perform well. So I think hopefully. Uh, they find a middle ground. But I don't have an opinion just simply because I think all of this political posturing could get out of hand quickly on both sides.
All right, I want to hit you up on two more things, or at least one major one that we can combine together. Bitcoin and gold have been doing incredibly well. First of all, obviously, I can you can offer me opinion on both of them, but I want to corner you as to which one you think outperforms. Let's say for the next 3 months. Obviously, there's more volatility in the coin,
That's
but why
that's
don't you
a
give me your opinion?
It's a flip of a coin. It's a flip of a coin, but the easy answer is Bitcoin should outperform because gold is getting a little bit depressed because of strong dollar trade of Trump, so on and so forth. But I actually think, I mean, if we kind of think it through, maybe not 3 months, but maybe 12 months. We all know that Trump wants lower rates. We all know that lower rates, of course, are incredibly positive for gold. Um, the gold trade to me is a sovereign debt trade, right? I mean, we see what's happening with, we didn't even talk about Europe and the fact that the French OTAs, the French sovereigns are
Yeah.
blowing up, right? And if the French sovereigns go, where does the euro go? And to me, the deficit problem in the U.S. is also a serious problem. That's why Scott Bessent is coming in. He's got this three-arrow proposal, which is 3% growth, keeping the deficit at 3% of GDP, and getting 3 million more barrels of oil to go. Now, that's a great plan. It's simple, clean, and if that policy goes in effect, I think gold may see more of a correction because it actually means that the dollar should strengthen. But if they can't control the sovereign, if they can't control deficit growth, that's why gold is doing so well. That's why Bitcoin is doing so well too. So I think near term it's a flip of a coin. Longer term, I again, there's going to be a referendum on just how well Trump manages the sovereign debt issue. But given his past history of how he manages his own debt issue, I'm not holding my breath. So I got to be long gold at this point. I got to like the chances of the yellow metal.
There you go. Well, in terms of Bitcoin, obviously, I've been a fool and like staying poor, and I've basically been a no
Yeah,
coiner. But here we
well,
are.
although
Here.
I will say, sorry, I will say that I day trade Bitcoin every day. London Open, 4 o'clock. You guys can come join me on YouTube if you want to, and I love it. I mean, it is the greatest scalp instrument ever invented to man because the thing moves about 2% a day, so you have tons of opportunities
Right.
if you enjoy scalping. As to its overall direction, I mean, I think you have a lot of institutional support now. I think both you and I maybe have to eat a little crow in the sense we thought this was pet rock. It actually turned out to be
Yeah.
a socially conventionally acceptable thing. In other words, people are genuinely believe it is an asset. And the longer it stays, it doesn't have to do anything. It just like money doesn't have to do anything. As long as people believe in it, it has value. And it clearly does at this point.
The interesting thing is like the existing administration coming in is been at least showing signs of being obviously pro crypto,
Yeah,
and there was all this over the last few years, all this debanking and other things going on for all startups, and it seemed like they were trying to kill the market, and so this could in itself fuel a whole
right,
new cycle on that
right.
front, and like it's hard to size it up saying that it's going to stall
I mean,
when they're about to juice it up this way. The
At the moment, Chase Bank, I was going to say Chase Manhattan. That's just how old I am. Oh my
Yeah,
god, I
yeah.
can't believe it. JP Morgan Chase offers a Bitcoin account is the moment you know that Jamie Dimon lost. So that's
The
I think you're right. I think you're right. I think this becomes a socially acceptable product, not just the fringe crypto bros product. It just will have that really significant institutional support.
the
And yeah, maybe people are right that it goes to 500,000 a coin. Who knows?
So, critique my opinion here, but like one of the things that I feel that's going to become an increasing kind of trend is the fact that Bitcoin has now been securitized in the terms of like now ETFs, futures. There's options on this stuff, everything like accessible by anyone. Before it had this kind of like safe haven label where it's kind of like this thing that you could kind of hide, but people are levering up into Bitcoin with money that they would otherwise have been putting into stock markets or anywhere
Right,
else.
right,
And when the market enters a period of distribution, some sort of liquidity event, anything that ends up happening, I feel that Bitcoin is going to be very susceptible to correlation, where basically,
Oh,
when
yeah.
risk assets are selling, Bitcoin is not going to be a safe haven at all. In fact, it probably will be even that much more volatile on the downside when that selling happens. Do you
But
agree with this?
what have we learned from all of the past crashes of Bitcoin? Higher lows. That's what we learned, right? We learned that yes, does it go to 50? Yes, but it will stop at 50 and then probably rally again. There's two questions here. The first question is, can this thing correct viciously? The answer is absolutely.
Yeah.
And we don't know what could trigger it, and it absolutely could. The second question is, does it have staying power? And as you were saying, yes, it's become democratized. Everybody can access it through ETF and other stuff. The real breakthrough, in my opinion, will be when Mr. Joe can pick up the iPhone without having to download an app, create an on-chain account and all the other crap that nobody who doesn't have technology skills is able to do, and just have a Bitcoin savings account, or which is, I guess, it's an oxymoron in itself. But can have essentially Bitcoin as a digital asset on the iPhone. The moment we have that, it really, I think, becomes a true acceptable social product across the world. I mean, it is in many ways already, but
Yeah.
like in an institutional sense, in a fully authority given sense, and that I think is a much more reality now than it was 5 years ago, 10 years ago. And with this administration, I think one of the key things is that by the end of this administration, they want that to be a reality. They want the average American to be able to basically have a Bitcoin wallet without the way they have a dollar wallet, without
Yeah.
any technological barriers to it.
All right. Boris, we're running out of time, buddy. Listen, I am so glad you
Sure.
came on. Listen, before I let you go, though, please, for all our listeners that want to find you,
Yes.
scalp some Bitcoin with you, or whatever you want to do, where do they find you? Give us your
The
deets.
easiest thing, guys, just follow me at FX Flow. You see me. Oh, you don't see me. At FX Flow is my Twitter handle at FX Flow. I post. It actually goes live on Twitter. I stream on Twitter as well as YouTube. 4 o'clock in the morning, and then we do Bitcoin and gold, and then 9:15 we do the traditional futures. We trade Nasdaq
Do you
futures,
sleep? Do you sleep
S&P.
4 in the morning? You're up.
I am up in the morning. That's why I take naps, my friend. That's why I take a midday nap. That's my secret secret sauce. But yeah, I am up at 4 in the morning. It's a lot of fun. We have a great time. Bitcoin is a blast. Gold is a blast at that time. So yeah, come hang out with me. It's a lot of fun. If you're a degenerate trader as I am, it'll be fun. And then we can also talk macro. I'm happy to talk macro with everybody
Well,
at any given time.
you're gonna have to come and trade out here in Portugal because we're on that London time zone. It might
Oh
be
yeah.
really easy on you for your
Yeah.
scalping.
Like, I was in Portugal last summer. It was one of my best trips. I loved it.
Yeah.
It's so much fun. So much fun. So great.
All right,
It's been wonderful to be with you. It's too short as always, but hopefully the markets will be kind to all of us in 2025.
Boris. Looking forward to having you back in the future, bud. Thank you so much for your time, buddy.
Bye bye.
All right. Well, thank you for tuning into the Huddle. We'll be back next week with another episode. Cheers, everyone.